Alright, so what is going on, guys? STO here, and Happy New Year. Today it is the 3rd of January 2024, and we just started a brand new year. Before we even begin with the analysis, I just want to tell you that during this year, I wanted to do a private mentorship and I also wanted to do a free mentorship on YouTube. However, I believe that I can absolutely give you everything that I've learned for the past years of my trading career, and I'm gonna give it all away for free. You're gonna have market analysis, weekly analysis, you're gonna have macro perspectives like this completely for free on the YouTube channel. However, this idea, because why am I doing this? This idea comes from a subscriber of mine that told me, STO, okay, I'm going to learn everything you are teaching. However, I do not have any money and that upsets me, and that does not let me learn how I should learn. It does not let me learn properly. The stress of not having money does not let me learn properly. Therefore, I decided to change gears. I decided to give you everything for free and to help you make money based off my experience. So we're going to have a signals group in which you are just going to copy everything that I do. And if you're not convinced enough that I can absolutely trade, I can absolutely predict these markets, you can go back and look at everything that I've done for 2023. Absolutely everything was predicted. I've had days in which I predicted the London session, the New York AM session, the New York PM session, and the last hour of trading. Basically predicting the whole day up and down. And that was done by predicting the market on Twitter, having my analysis like I have it right now, publicly before it happened on Twitter, on Insta, on all of those social media platforms. Now, what I want to tell you is that these videos, and this is the last thing before the analysis, but what I want to tell you is that these videos are going to be recorded. I'm not going to edit them out. I'm not going to make them short. I'm going to make them long because this is how you learn properly. I'm not going to remove any pauses in my speech. I'm not going to do anything. You're going to get it raw because this is how you learn, and you have to understand that this is going to take some time, but when you learn to do this, you have a skill that makes you absolutely independent of financial problems, of location problems. You can do whatever you want, whenever you want, with anybody you want, from wherever you want. So, before this is the last message before I start this analysis, but it correlates with the analysis. I just want to tell you that I'm not a licensed advisor, and do not take everything I say right here as a means of, oh, I have to take a trade, because this is not a trade idea. This is not an indication for you to take longs or shorts based on this analysis, and this is purely my opinion. These concepts have to be tried on a demo account before they're tried on a live account, and you are the one that decides when you are going to finally make the switch and trade a live account, if you really want to do that. But let's just get into the analysis. So before I tell you about the quarterly analysis, I just want to tell you that I also analyzed the 12 months chart, I analyzed the 3 months chart, and I analyzed the 1 month chart. Alright, so basically within the premise of the yearly chart, which I'm not going to show here because that's too complicated for most, but I'm just gonna say the direction that I've determined from the yearly chart, and I'm gonna transmute it into a 3 month and 1 month chart. So as you can see here, January 2024, March quarter 1, because this is the quarterly analysis for the next 3 months, starting off the dollar index chart. And by the way, this is how you can journal, but we're gonna go into that deeper when we start the mentorship. Into the 3 month chart of the dollar index within an already pre-existing bias to the downside. So I have my bias for the year, for the whole year, is bearish. However, I just want to tell you before I talk about anything in this chart, I just want to tell you that my bias has scenarios. If I see X, then I will do Y. However, I also have scenarios in which if this happens, then my idea and my bias is canceled out and I'm gonna go into the other direction looking for the opposite direction. So my opinion, because this is a 3-month and a yearly analysis, can change and can vary throughout the whole year. But this current month on January, before the year even has begun, I mean the chart started trading already, but before we go deeper into the year, my direction for the dollar index is to the downside with the confluence, as you can see within the 3-month chart, is that we have the 3-month SIBI. Looking at that sell side imbalance by sudden efficiency, that fair value gap, we have the consequent encroachment, and we can see how the bodies of the candles closed below it, only touching the upper quadrant with the wicks. The upper quadrant would be the 75% of the fair value gap. Then we see the market right here. I'm talking about this. The market then goes to a consequent encroachment of this wick, going to the downside, attacking this buy side imbalance side inefficiency, then ultimately going right below that buy side liquidity pool. So therefore we're trading below that. Now, with a premise to the downside, with an already pre-existing premise to the downside, I would want to see the market only go into the 3-month bearish order blocks opening price, because within the yearly chart, the market has only went into the 25% of the previous candle's wick. Therefore, I would take that within my pre-existing bias. I would take that as a means of weakness to the downside within the 3-month and a 1-month chart. And as you can see, the bodies of the candles, I like how we respected that. However, I would like to see the market remain below that opening price. And what would cancel out my idea would be the market closing above this mean threshold. So we have this bearish order block from this body low to this body high, the mean threshold. If we close above that on a monthly basis, on a monthly chart, then I will look for this high and the mean threshold of this candle. Please note that we're talking about 3 months. Okay, so that's going to be a long delivery. However, the highest I would want to see the US dollar index would be 102.594. We can also utilize this BIST that we are trading inside. We can utilize its consequent encroachment, but I don't have it annotated here because there's too much going on within this chart, and we're only into a 3-month chart. So we have more annotations on a monthly and a weekly and so on and so forth. But from this high to this low, that's a fair value gap. That is a buy side imbalance, sell side inefficiency. I'm looking into the consequent encroachment. I would like to see if we didn't even, I believe we closed below the consequent encroachment. Therefore, that would be a confluence to my premise to the downside. I would want to see that act as resistance, plus having the layered PD array with the order block, which means that we have the fair value gap, the consequent encroachment. I would only want to see price into that, plus we have the confluence of the order block, which is basically almost the same price. So 2 PD arrays, I would like to see price being resistant inside. Then what I would want to see attacked would be this 3-month BIST as a quote-unquote closed target, but a closer target would be the yearly consequent encroachment of the wick of the order block. So that is a yearly PD array, and correlating that PD array with this 3-month BIST plus the yearly order block's opening price. Now, if we go below that, but I don't want to analyze that further in price, like that far away in price. If we close below this opening price, then I will look for the yearly mean threshold of that bullish order block, and I will look for this inversion gap to be used as a means of resistance and sending price lower into the sell side liquidity pool and ultimately into the SIBI. But that is far away. So for these quarterly targets, I would have this low here, and if we close below this low, then we're 100% going to go into this 3-month BIST. I would look for the consequent encouragement. Plus, we also have this mitigation block. Plus, if we are going into this, then I would like to see the market close below this consequent, this mean threshold of the breaker, but that is too much detail for now. And I'm just reminding you that you're going to know how to do this, but you do not have to rush the process, okay? Now, if you're looking at the DXY chart, what do we utilize that chart for? If our premise in the dollar index chart is to the downside, that is a risk on scenario. If the dollar index goes down, then I want to see the forex markets up and the indices markets up. Therefore, within the risk on scenario, which means that dollar index is down and the S&P and Nasdaq is going up, within that risk on scenario, I would like to see the ES taking on the all-time highs that the Nasdaq already did. So these relative highs are taken in the Nasdaq but are not taken in the ES. Therefore, within the premise of a risk on scenario in the dollar index plus the six sister approach in which we have the Nasdaq as the leader, I would like to see the ES taking on this all-time highs. Now, I like the signature of these bodies. Here, we have this blue shaded area that is a fair value gap on a yearly chart. Plus, we have the upper portion of that fair value gap, in which we also have this fair value gap here. So this is a refined area on a 3-month chart on a quarterly basis. And then we can see how beautifully within our premise to the upside that we're going to go into this measuring gap STDs. I'm not gonna go into that. I'm gonna teach this, or I'm gonna talk about this, but not right now. But basically, what an STD is a standard deviation. So let's just say I take my fib from this low to this high, and then we would have the negative -1 level, negative -1.5, and that is basically a standard deviation. So projecting a price point or a price dealing range. And this is exactly what I have here, but measured on a yearly chart. And we have the -1 and a -1.5 and the 50% level between those. So this is what I'm targeting within the ES. Now, looking at this chart, what I see is the market closing about that. Look at the bodies of the candles respecting that, plus the price coming back into it. But what I see here is this fair value gap here, which has been rebalanced with this low. Therefore, this low becomes now an intermediate sum low. Therefore, within our premise to the upside, the market does not have to go below this, and any run below that will change my mind. However, I would argue that this chart actually looks very one-sided. Like this is a very one-sided, very clear direction to the upside, based also and correlating with the dollar index chart. And now, within only looking at this chart, my experience tells me that we are not going to hit this 3-month 3rd of July 2023 order block high. I would not like to see that. If we are strong to the upside, I would not like to see that high being touched. I know I have it annotated, but I would prefer for the market to go to the upside directly with a big 3-month candle into those standard deviations. For all the people that still have their stop losses here, I don't believe that the market wants to leave them here and give them the opportunity to take their stops out. Therefore, I would like to see the market into these standard deviations with speed without even retracing into that. Due to this here, this beautiful retracement back into the Reaper inversion gap. And this is exactly what I wrote here. There's no point in stopping and reading this because it's essentially the same thing I'm talking about. Within the 3-month Nasdaq chart, same thing, same premise, but we took the all-time highs. So this is the relative leader to the upside. Same thing, same scenario, measuring gap STDs. we have here, look at the bodies of the candles of closing inside this here, the 3-month busy refined within the yearly, exactly the same thing as the ES. Market going above this Reaper, then utilizing it as a means of support to the upside to take on this. Here we can see same signature, 3-month intermediate time low, because we rebalanced this fair value gap, we repriced to it, we left it, therefore we rebalanced it. And the same premise would be for the 3-month order block inside the Nasdaq. We would not want to see price come back into it, and I would like to see the price attack this constant encouragement between I'm going to talk about what that is. From this low to this high, we would have a standard deviation of minus 0.5 here, around here, something like this. I did not want to add it to the chart because we already have all these standard deviations and it would look absolutely awful. But basically, having that as a closer target, I took 50% from this high to that target, and that is exactly what this is. So within all these premises, I will now go into the monthly chart. And what we see within the dollar index on a monthly chart is, if you remember, within the 3-month chart, I wanted to see price only coming up to this opening price of the order block. I wanted to see the sell side being attacked, this 3-month basically being attacked, and ultimately the yearly order block's opening price. Now, a thing that further gives me the idea that the market does not have to go back above for the mean threshold of that bearish order block, and I would not like to see that, is the fact that we have this balanced price range here, number one, but two, we have this intermediate term high that rebalances this imbalance here. So we have the market falling, the market taking on a level of buy side, which further increases the premise that the market does not have to come here. It comes to the upside into this fair value gap, then leaves it, rebalancing it. Therefore, I would like to see the market closing below this constant encouragement. I do not have it here, but what that is basically the 50% from this, 50% of this wick. I would like to see a closure below it on a weekly chart, and then ultimately setting price below the sell side, and ultimately in the 3-month busy. Do you see how many signatures of I don't want to see price here we have? Do you see how powerful that is? Now, I want you to remember that we also have scenarios in which if I see some signatures, then I'm going to reverse the direction. All right. This is a monthly and a 3-month and a yearly perspective. All right. So it is going to take a long time to materialize, but I wanted to have this on my YouTube channel as analysis and how I analyze the charts. And if I'm wrong or right, it does not matter. It matters if I'm profitable. So I can be absolutely incorrect with everything that I've said today, with everything that I've analyzed, but I can still be profitable intraday, because remember, I execute upon a 1-minute chart. I don't execute upon a weekly chart. I don't execute upon a monthly chart. No, 1 minute. Based on a 3-month chart, based on a 1-month chart, based on a weekly chart, based on a daily chart, all the way to a 1 minute. Moving on, risk on scenario, DXY up, the indices going down. I'm going to go through this with speed because I already bored the fuck out of you, but I just want to remind you that this is how you fucking make money. So please listen to this, and sorry for swearing, but I'm unfiltered. Looking at this chart on a monthly basis, on a monthly time frame, what we can see is the respect of this here. This is the 3-month Reaper inversion gap. You can see the price coming back into it, creating this intermediate some low, and within the premise of the 3-month chart that we want to go above this here, this all-time highs within the ES. We saw this here coming back into the constant encouragement of that Reaper, closing into the upper quadrant, taking on this high. And remember that we did not want to see price come back into the order block high. Therefore, this would be a breakaway gap, which will further increase the strength that I wanted to see within the 3-month chart. So basically, because we want to see this being left open, this fair value gap, I don't want to see any come back into it. Correlating that with the 3-month 3-month order block high that we did not want to see price come back into, I would like to see price being strong to the upside for the 514048, and then further if we are trying to reach into the other standard deviations. But one more confluence to this idea that I do not want to see price coming back into this would be the fact that we closed above the consequent encroachment, not the consequent encroachment, but the mean threshold of this mitigation block. So we closed above it here, and then I would not want to see price going below that. We can go with the wick, but I would prefer for price to remain above the 50% between this low and this high. This is a mitigation block. I would prefer for price to only use the mean threshold of that as a means of support, then ultimately price being sent higher. And coming with the same premise within the Nasdaq, we have the all-time highs being taken here. Look at the bodies of the candles here, taking on level of buy side here, shifting the market structure. We have price coming back and rebalancing this fair value gap. We will price into it, then we go above it. Therefore, this is a rebalanced fair value gap. We have the intermediate zone low, in which if we see any runs below that, then RDI cancels out and we would look for lower prices. But what I would prefer for the market to do is same thing here, this to be left open as a breakaway gap and us to accelerate to the upside towards that fulcrum STD and into that level that I have highlighted here. Same thing with the Reaper inside the 3-month chart. Look at this here, closing above in the upper quadrant, then price coming back above this high, and that will be it for this analysis. So basically what I want to say is I want to see the Nasdaq and the S&P higher. I want to see the DXY lower, and that creates a risk on scenario, and also for the forex markets. So if the dollar index goes down, I would want to see the forex markets go up, but I did not go in depth on Eurodollar and the GBP/USD because I only trade indices. So I hope you guys enjoyed this one. I hope you guys learned from this, and I hope you gained some value from this. And if I'm wrong, then I'm gonna be wrong. If I'm right, then you're gonna see it. So I am STO. This is the 3rd of Jan 2024 now. And this is my macro perspective for the Nasdaq, for the S&P, and for the dollar index. See you next time.